Welcome to This Explainer. Today, we're diving into the pillars of profitable trading. We're going to look at the harsh, undeniable reality of why so many newcomers to the markets totally wipe out. What actually separates the consistent winners from the losers? Well, let's get right into it. So, why do most beginner traders lose money? Honestly, it's the million-dollar question, right? I mean, people jump into the markets totally pumped, hoping for financial freedom, but the vast majority end up handing their hard-earned capital right back to the market. Like, why does this keep happening? Okay, let's dive into this. Most beginner traders lose money because of three specific mistakes. And these are highly destructive, yet completely, absolutely avoidable errors. It's really not about lacking some magical secret indicator. It just boils down to fundamental flaws that literally drain your capital. Let's look at mistake number one, overtrading. You know, staring at flashing numbers on charts all day is just incredibly seductive. But listen, more trades do not mean more profit. Actually, scratch that. Doing more is often worse. We have this deeply ingrained idea in our heads that hustling harder and doing more equates to better results. But in trading, chaotic activity is basically a giant vacuum. It just sucks your account dry through fees and terrible setups. Which brings us to mistake number two, emotional trading. So, if overtrading is the physical action, emotional trading is the absolute psychological battlefield. Fear and greed. These two emotions destroy accounts so incredibly fast. Fear makes you panic and hit that sell button at the exact wrong time, while greed is what keeps you trapped in a deeply losing trade, just hoping and praying for a miracle bounce. And that leads straight into mistake number three, no risk management. Now, you might occasionally survive a bout of emotional trading, but trading without risk management, that is a guaranteed path to complete ruin. Why? Because it literally takes just one single bad trade to totally wipe out your account. Just one. A single unmanaged swing in the market can basically erase years of hard work. And man, that is a really painful reality check. Okay, let's flip the script, the professional trader mindset pivoting to profitability. So how exactly do the pros operate to survive these markets that constantly crush beginners? Well, professional traders focus strictly on discipline, patience, and risk management. While amateurs are out there just clicking buttons out of sheer boredom, professionals sit back, calmly execute a precise plan, and ruthlessly, and I mean ruthlessly, protect their capital. And this brilliantly illustrates the stark contrast here. Beginners are driven completely by fear, greed, and overtrading, right? While professionals are deeply anchored by discipline, patience, and risk management. The ultimate takeaway here is incredibly simple. Avoid these beginner mistakes, and you'll automatically be ahead of most traders out there. You really just need to stop the self-sabotage. So definitely follow for more trading and gold market content. But as we wrap up this explainer today, I want to leave you with one final thought to really chew on. Look back at those three destructive beginner mistakes we just talked about. Which one of those toxic habits, overtrading, emotional trading, or a total lack of risk management, are you going to ruthlessly eliminate from your own strategy today? Seriously, think about it. Protect your capital, and we'll catch you next time.